Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP, so let's just dive in and let's start off with the US dollar. So the moment of truth is here on the US dollar. We are breaking down below that significant fib level that I have been addressing for a little bit of time, but also this is the moment of truth that if we get to retest this 200 3-day EMA at about 101. If we lose this, this is going to be a big moment for crypto as well as stocks, gold, silver, etc. Because guess what? The last time that we lost this was going all the way back to June of 2020. Mind you, on the weekly as well. So this is another thing that I've been addressing on the weekly for the US dollar is that there's levels to all of this. When we started to lose the EMAs, going all the way back here in October of 2022, right? The EMA started to flood down, and then all of a sudden, boom, we lost the biggest one, the 50 weekly EMA. Mind you, we lost the 51st back in May of 2017. This is during the bull run of 2017, 2018. But when we lost the 50, that was a big warning sign that, guess what? A big run in the markets is coming. And then as this continued to lose, especially the 200 weekly EMA, that's when things started to go crazy. And then we initially bottomed out back in January of 2018. But then another example of this is March of 2020. With March of 2020, we initially lost the 50 weekly EMA, and then we tried to regain strength. We couldn't. We got squeezed between the EMAs, and we ended up losing the 200 weekly EMA. This was during DeFi summer of 2020. This is when DeFi tokens started to go insanely crazy on the charts. And guess what? This led the way for the bull run of 2020 and 2021 to initially start. And then we ended up getting that bottom out in May. We had the market run up a little bit more, but guess what? When the market topped, it was because the US dollar gained strength above the 200 weekly EMA. So we are watching this very closely because if we continue to lose this and we continue to trail, I have two scenarios here. We could still see an impulse on the US dollar, but I'm expecting us at some point in time to lose this 200 weekly EMA. When we do, it is going to be very, very bullish for the entire market, including XRP. Now, with all of this in mind, what are the catalysts? Well, I said it in a video just recently. Well, the BRICS are expanding rapidly, and it is putting a lot of pressure on the US dollar. We do see Russia wants BRICS nations to explore new trade currency. Now, currently, the US dollar, in terms of dominance, is losing a lot of strength. I've been mentioning it for a while now on the channel that the BRICS are expanding rapidly. I've been mentioning it for well over a year now. But we do see our goal should be focused on writing new rules in the financial sphere in order to enable the use of an already common currency. It doesn't matter whether it's a digital ruble, a digital rupee, a digital yuan, or some other currency, but this currency must follow the laws of our respective nations. And he pointed out that the US dollar does not benefit the shared objectives of both countries, noting that reliance on the currency gives the US an unfair advantage in the grand scheme of things. This is what I mentioned, right? These nations, they want to utilize currencies that is extremely decentralized. They don't want one nation to control it. This is also why I've said, cryptocurrency will play a vital role in a lot of things around trade, around currency wars, because crypto, at the heart of it all, is fully decentralized. XRP. A lot of people look at XRP and they just overlook it because they think that Ripple controls it. Ripple is completely different than XRP, and XRP is completely different than Ripple. I can utilize XRP 24/7, 365, and there's no ties to Ripple at all. XRP is a perfect example of a trade token that could be utilized as a currency that has no control aspect of it, and all of these nations could benefit from utilizing it. Does that mean that they will? It's questionable, right? But the biggest thing that we have seen is Russia turning to stablecoins as well as CBDCs, which, again, I hate the idea of these CBDCs. Stablecoins, I'm not too mad about. I actually think that stablecoins could benefit retail as well as even the central banks. But we do see here Russia's plan for a new currency outside the dollar appears to be fueled by the economic sanctions imposed by Western powers following its invasion of Ukraine in February of 2022. It was reported that the sanctions wiped off nearly 5% from Russia's GDP as commercial banks struggled to settle international transactions after SWIFT shut them out of its settlement platform. The war on currency really started to ignite back in February and March of 2022, which we were reporting on at that time. And I even said from there on out, we will see a lot happen. And so far we have. A lot of this has been centered on the BRICS and what's happening around the BRICS. And it's insane to say, like, you know, this has all been happening within like the span of just a year. But in the last couple of weeks alone as well, we have seen massive updates from Saudi Arabia, from Egypt. I mean, there's so much, right? China has been a big player. Russia has been a big player, obviously, and the rest of the BRICS nations. But, you know, Saudi Arabia has been one that we've been currently looking at and putting a spotlight on because they are the ones that truly determine what happens next. But we do see over here from Malaysia. Malaysia Prime Minister says there's no reason to continue to depend on the US dollar. This just happened today. And we do see down here, Malaysia sees no reason for dependence on the US dollar. The current state of the US economy is greatly defined by its current fragility. Moreover, jobs data released today showcases that fragile nature in full effect. Conversely, the international faucets of the US dollar has been front and center, with Malaysia recently sharing its perspective. I'm telling you guys, like, as we look at what's happening, we are seeing a huge push from, you know, relying on the US dollar to ultimately ditching the US dollar in general. With the economic strength of China, Japan, and so on, I think the proposal should be negotiated at least about the Asian Monetary Fund and can utilize the ringgit and the country's currency accordingly. Specifically, it was in response to inquiries regarding countries that no longer seek to utilize the US dollar in trade transactions. So I'm telling you, like, this is probably one of the biggest moments in the span of our monetary system. We are about to see a revolution happen that doesn't happen in well over 100 years. This is a big deal. And we do see over here, Saudi Arabia's Crown Prince MBS says he is no longer interested in pleasing the US. All of this is happening because of what's happening within the US economy. And we do see here, simply, I do not care, was the assertion made back then by the Crown Prince when asked if Biden misconceived things about him rolling the ball further. He added that Biden should be focusing on America's interest. Alongside, the prince also made it clear that we don't have the right to lecture you in America. He emphasized the same goes the other way. So again, there seems to be a lot of conflict here. And the biggest deal about Saudi Arabia is the fact that they are the ones that are holding any sort of valuation to the US dollar, the petrodollar deal. You know, why would Saudi Arabia's Crown Prince care what the US does? Because at the end of the day, they have the upper hand. And I think that that's where America really starts to ignore the thing. So when we really kind of look at what's happening around Saudi Arabia, things are starting to trickle in. And we did see this week, we have seen the following. Saudi Arabia agreed to join the Shanghai Cooperation Organization as a dialogue partner, which, by the way, I included this in a recent video. I'm just kind of giving you guys a quick update on this. So China and Brazil made a deal to ditch the dollar for trade. China and France completed the first LNG trade settled in yuan. Asian nations consider dropping the US dollar, euro, yen, and British pound from financial transactions. We learned that the BRICS reserve currency should be or could be potentially backed by gold and other commodities such as rare earth elements. So this all happened in 7 days. So as we look at this, like, things are really starting to push forward on. And also the craziest thing is that the Chinese yuan replaced the US dollar as becoming the most traded currency in Russia. And this happened yesterday. So as we really kind of look at what's happening within the monetary system, things are changing. And this is a major change. This change does not happen. It happens every century, every 100 years. And we are starting to see the warning signs. And I want people to realize this, and I want people to wake up to what is happening right now. Because right now, as we look at the US dollar, you know, if you zoom out, yeah, sure, it looks good. But I just made a video on the macroeconomics of the US dollar. And I mainly shared the fact that ever since going all the way back, I mean, we're talking about almost 40 years ago, the US dollar has made lower lows and lower highs. This is not good. This is not good at all. And the US dollar, as we know it, could be on the brink of a major collapse. And if that is the case, then guess what? You don't want to be parked in the US dollar. And especially today, more than ever, you do not want to be parked in the big banks. One thing that I've been noticing alongside of all of these major updates. So first off, we do see Russia and India abandon Europe dominated oil price, agreed to use Dubai oil price benchmark. This was a big deal as well. A lot of it is about oil. Mainly it's about oil, right? And trade instruments. It's the biggest deal. But the craziest thing about all of this is that we are seeing these nations push away from the US simply because of what's happening within the US. What we just recently seen today around the jobs reports, right? We've seen the largest layoffs of 2023 broken down here. Amazon, 27,000 employees. Google, 12,000. Meta, 10,000. Microsoft, 10,000. Goldman Sachs, 3,200. Coinbase, 25%. Zoom, 15%. Glassdoor, and the list goes on and on here. But the craziest thing about all of this, right, is that going back, so here's a breakdown of tech company layoffs by month since January of 2022. Nearly 1,600 companies had laid off 330,000 people. In the first 3 months of 2023 alone, we have seen 167,000 tech layoffs. This is more than the entire year of 2022. This is a big deal. What's really concerning about all of this is that these are big tech companies. I mean, outside of the tech companies, yes, there's other major companies like even McDonald's, for an example. They shut its corporate offices as they prepare to cut hundreds of employees. But the thing is that most of this is tech companies alone. Like, these tech companies are the big ones that are seeing a lot of stress right now. And outside of this, right, even the banking sector, we've seen large US banks see record deposit outflows, small bank outflows stall. This is a big deal because recently, as we look at them, right, US bank deposits fell by $125.7 billion in week ended March of 2022, or 22nd, sorry. The craziest thing about all of this is the fact that the economy is weakening. We are seeing the US economy at the weakest point since 2008. And what's current, and I would even say that we might be weaker than 2008 at this point. But what's very concerning is we are seeing a war outside of the US, and it's a war on currencies. It's a war on, you know, the financial system right now. And it's all centering back to the US dollar. And as we look at the US dollar, where we are being pinched here on this chart is right between the 2016 and 2017 resistance zone. I would argue that this is going to get very interesting very fast once we start to see a break of this structure. And I do think that this resistance zone here is going to be very hard for the US dollar. And I do expect at some point in time us to either, one, retest around 95, 96, or possibly 93, and at the high end, you know, maybe even 90 or 89, 90, which all of these from today's price, it's either one, a 6% drop, two, a 9% drop, or three, an 11.6% drop. But the question is, where will the US dollar stop falling? Because as we look at the macro, I don't believe that the US dollar has a strong bull case for it at all. I shared the idea of like 2008. Look at 2008, for example. So here was 2008. It took for the US dollar to gain any sort of major strength 2,192 days. We were struggling under this major resistance zone, and it took 2,192 days in order for this to actually bounce back. The question is will we have to wait another 2,192 days? And if that is the case, this will take us to 2030 and I'm going off of 2024. What's crazy about all of this, though, is the events leading up to the big collapse. Everything is trickling in, and it's all starting with the BRICS nations and a major push against the US dollar outside of the US while we sit here and, you know, are extremely patient. Like, the US is basically doing absolutely nothing to counteract what's actually happening, which made a lot of people, including myself, question, is this all by choice? Is this all by plan? Is there a much larger plan at place? It's questionable. Let me know what you guys think down in the comments below, though. I'd love to hear from all of you. Definitely hit that like, subscribe, and turn notifications on button if you guys did enjoy the video. If you guys did also want free content, you guys are more than welcome to follow me on Twitter and join the video Discord down in the description below. So it's up to you all. Have a beautiful day or a beautiful night wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.